I hope you had a wonderful week, and thank you for taking time to join us here. We have some wonderful topics lined up. We're going to talk about Social Security, the topic that seems to generate questions that are endless. But what are some of these important rules you should be considering? Then diving into estate taxes, something that doesn't seem to get talked a lot about, but what are some various thresholds and what that could mean to you in taxation? Ladybird deeds, what are they, should you have one, and maybe how they fit with your legacy plan. And finally, we're going to dive into qualities that you should look for if you're considering hiring a financial advisor or interviewing them. What are some of the questions that maybe you should be asking, but what are some of the questions they should be asking you in return so you know they have your best interests in line? We're excited to bring you all of these and much more this week on Retiring Well.
Retiring Well, brought to you by Centennial Wealth Advisory, financial advisors specializing in retirement planning and serving all of Northern Michigan. Retiring Well, helping you plan for a successful and comfortable retirement. Retiring Well, plan to retire well.
I'd like to share with you some Social Security rules that are very important for you to be considering. So starting off, it's going to be based on, Social Security be based on how much you earn and when you begin your Social Security are going to be really important factors. But here are a few other ideas. So most workers are essentially paying 6.2% of their earnings into Social Security. If you're self-employed, that might be 12.4%. And then you can review your earnings history at ssa.gov. Which we strongly encourage because we've come across a number of cases where people have found maybe some reporting mistakes and maybe Social Security was reporting that you earned less than you actually did. So again, I'd encourage you to go to ssa.gov and look into your personal Social Security account. In 2022, there was a tax cap of $147,000. So again, there's going to be a limit on your earnings that are going to be subject to the Social Security tax, and then ultimately it's adjusted for inflation. So going back to 1990, the tax cap was at $51,300, and then in 1950 and earlier, that was $3,000. Social Security payments are based on your 35 highest years of earnings. So take that into consideration, and those are adjusted over time as well for inflation. There's a cost of living adjustment associated with your Social Security, and those are going to vary year by year. It was 0% back in 2010, 2011. Back in 1980, it was upwards of 14.3%, and then here in 2022, it's 5.9% that was increased. Your initial benefits for Social Security retirement benefits can start at age 62, but that may be 25 to 30% lower than your full retirement age, depending on your age. And maximum benefits occur at age 70, which you can typically experience a 24 to 32% amount higher than your full retirement age, again, depending on when you were born. You want to be careful if you're working and collecting Social Security payments prior to your full retirement age. There's different income limitations that adjust each year, and so you want to be careful of that. 2022, that limit is at $19,560. So you may lose $1 of benefits for every $2 earned above that limit. There's no income penalties once you reach full retirement age and draw Social Security, so you could work and earn as much as you want at that point. Taxes on Social Security depends on if you're single or married. And there's an equation out there regarding half of Social Security plus your adjusted gross income that you'd want to be paying attention to. So again, as you've witnessed, there's a lot of different moving parts when it comes to your retirement plan and Social Security. If you have questions, please give us a call.
Hey, welcome back. Social Security rules everyone should know. You know, depending on how long you live, sometimes Social Security might be the biggest asset that you have. So if you have not started your Social Security benefits, I think it would be prudent of you to go figure out what are the rules. How am I going to strategize my Social Security? How can I maximize the benefits? What pitfalls do I have to be careful of? You know, I'm in the Cadillac office and I will have clients that will come in and we'll do a whole meeting just on Social Security. How are they going to position that asset? How does that work into their holistic plan that we build out? The amount of times that they get to leave with understanding that, you know, when you understand something, there's just a small sense of peace that you have, sometimes a huge relief, that peace that lasts because you understand, you know, something that can be really confusing. And so through our process, we get to teach all the way through, from the first time you see us maybe on TV all the way through the meetings. We're constantly trying to help you understand what you've worked so hard for.
Yeah, it's so much fun to be able to educate you on all these different rules. I know it doesn't really sound that much fun, but to us it is a lot of fun. I had a great example of this out of the Petoskey office. So we had a couple come in, they were age 62 and 63, and the woman was already on Social Security, but the husband was debating, should he go on it now or should he wait? And he moved up from the Lansing area, and he always had a dream of working at a golf course in retirement. But what he didn't realize is there's that income rule for Social Security, that if you make, in this year, 2022, it's if you make over $19,560, you got to pay back some of your Social Security if you're on it. So in this gentleman's case, he had that dream of working on the golf course for the part-time income, but mainly for the free golf. And so it made the most sense for him to wait a couple years, fulfill that dream of working on the golf course, and then take Social Security at a later point. It didn't hurt his income or expense needs whatsoever. It just satisfied basically his whole plan by pushing off Social Security a couple of years. So that's just one scenario. But again, like I said, it's so much fun to hear what your goals and objectives are for retirement and develop a plan around that. It's what we love to do. So don't hesitate to give the number on the screen a call and schedule that no obligation free consultation. All right, coming up next, we're going to be talking about estate taxes and ladybird deeds. You don't want to miss it.
Every success story starts with a plan. The success of your retirement depends on a solid financial plan. If you are nearing retirement or already retired, we invite you to an informative live event to help you plan to retire well. There is no cost and no obligation, and dinner is on us. We are Centennial Wealth Advisory, financial professionals, specializing in retirement planning, serving all of northern Michigan, with offices in Traverse City, Cadillac, Petoskey, and Gaylord. Our presentation includes: is your retirement prepared for inflation? Do you know the true risk of your investments? What happens to your assets when you pass away? Do you have a tax plan? How does your income affect health insurance costs? And much more. Call 888-608-5825 to register and choose the date and location that works best for you. Tuesday, June 14th, at Lakeside Charlie's in Cadillac, or Thursday, June 16th at the Otsego Resort in Gaylord. The live event starts at 6 p.m. and is free to attend, with a complimentary gourmet dinner to follow, but seating is limited and tends to fill quickly. Call 888-608-5825 to reserve your seats today. Don't miss this important live event to help you plan to retire well. Call 888-608-5825 today.
Let's talk about estate taxes. I know, something you really want to talk about, right? As maybe you're having your morning cup of coffee and watching our show here. We appreciate you tuning in. But estate taxes, maybe something that doesn't get talked about a lot, because over the years they've kind of continued to adjust this threshold or exemption number. And I'll talk about that in a minute. But let's walk through kind of where estate taxes are. So the IRS basically sets a threshold or an exemption of what you're allowed to pass on to your heirs without having to pay that additional estate tax. Some people talked about it inheritance tax or death tax. I think people talk about it in different terms, but effectively it's an estate tax. So remember, first thing to establish, IRAs are I don't want to say not exempt from this, but remember, IRAs are different because you haven't paid tax on those yet. So they're going to, when they pass to a spouse, they're effectively just going to, your spouse is going to assume that IRA. If they pass to your children, they're going to have to, or other people, sorry, children or others besides a spouse, they're going to have to pay tax on that at some point when they take distributions. There's different rules and stuff out there, but estate tax, I'm more talking about the other stuff here. So right now in 2022, that estate tax exemption is $12 million, just a hair over $12 million, okay? So as if an individual passes with less than that, there's not going to be per se an estate tax on that. If an individual passes more of that, then there's going to be a portion of that estate that's going to be subject to that taxation. Now, if you happen to be married, each person gets that exemption. So basically, you're a little over $24 million with that exemption. So that's why it's not talked about as much anymore, is because that number has gotten raised to a point where I would say most people don't have to worry about that or doesn't fit their needs. Now, if you're in that boat and you have that additional assets and you're creeping into that or going over that number, boy, I sure hope you have some estate planning done and worked with estate planning and financial advisors that can help you position that to try to avoid some of those brutal estate tax hits. It's interesting to look at the history of this over time because things have changed and that number kind of continues to has gone to adjust. I thought looking back it'd be interesting, and basically what I did is I looked back to about the year 2000 or right at 2000, and that estate tax was only $675,000. So think of that today with housing prices going up and stuff like that. Just with a lot of people's houses here in northern Michigan, you probably would go over with that with just the home alone. So with these estate tax thresholds going up, it potentially may help you or put you in a different situation. And that's why, proper estate planning is vital. Here at Centennial Wealth Advisory, when we look at a financial plan or retirement plan, it's not just the investments. It's not just that number on the paper. There's much more to that. And a vital, vital piece of that is that estate plan. Where do assets go when you're gone, and how are they going to be taxed? You want to make sure you and your family are keeping the biggest pot of the pie and not having to pay more than you should have to for taxation.
Are you retired or approaching retirement in the next 5 to 10 years? Join the Centennial Wealth Advisory team for an exciting presentation with complimentary gourmet dinner and learn essential financial strategies for a comfortable retirement. Call 888-608-5825 to reserve your seats today. There is no cost and no obligation. Call 888-608-5825.
In today's day and age, with a longer lifespan, you're more likely to encounter both good and bad market performance. For that reason, when planning for retirement, it's increasingly important to seek guidance from a financial advisor who can help you structure an income strategy that reflects your financial situation, risk tolerance, and investment objectives. You don't want just any advice, but objective financial advice. With so much at stake, it's important that you feel you can trust a financial advisor to consider a wide variety of possible solutions, including both investment and insurance products. Here at Centennial Wealth Advisory, we're not beholden to any certain investment tools or vehicles. We're independent. We can offer a wide variety of investment tools that meet your needs. So please, if you have any questions or you want to schedule an initial consultation, don't hesitate to give us a call at the number on the screen. We're happy to help in any way that we can.
Lady Bird deeds. So they essentially got their nickname from President Lyndon B. Johnson when he used it to convey property to his wife, Lady Bird Johnson. So you think about your typical bank account. You can put a POD, payable on death, or TOD, transferable on death, a beneficiary designation on, say, different retirement accounts that you have, or life insurance. Well, a good estate plan means that your assets are going to be directed appropriately upon your passing. So with that, with your home, that's sometimes your largest asset. And with that, a lot of times people don't always have what they would look at as a basic beneficiary designation. So that's where this Lady Bird deed comes into place. And again, I'm not an attorney. I personally never had the desire to go to school for that many years, but I am thankful that there are a lot of folks out there that did spend that time understanding all the details of the law. So this Lady Bird deed, the primary purpose of this is ultimately to avoid the probate court process when you pass away. If you have like a basic will, that isn't going to essentially accomplish that. You'd still have probatable assets if they all don't clearly have a named beneficiary. So with the Lady Bird deed, you can still mortgage your property, you can sell the property, you can essentially do whatever you want with the property, but it's naming then whoever individual, multiple individuals, a charity, whatever it may be that you want to leave your home to within this Lady Bird deed. So again, it's simply a beneficiary designation on your home, and the main goal of this is to avoid the probate court process, which I'm not sure if you're familiar with, but those can sometimes be dragged out for a long period of time, can end up costing you or your estate a lot more versus having maybe some planning done ahead of time. So elder law attorneys are going to be the attorneys that you'd work with and who will most commonly use Lady Bird deeds as an estate planning tool. So there's a whole lot of different areas when it comes to your retirement plan that you want to be paying attention to. And I'd encourage you right now, from a big picture perspective, to go back through and confirm those beneficiary designations on all of your different accounts. If this is a second marriage or third marriage, whatever it may be, make sure that you have the proper beneficiaries designated on those different retirement accounts or life insurance, or if you're 401k changed plan providers. Sometimes that beneficiary information doesn't automatically transfer. So again, encourage you to double check all that information and maybe consider talking to an estate planning attorney regarding a Lady Bird deed.
A lot of great information there, a lot of information that oftentimes is missed in your retirement planning, being in state taxes and then Lady Bird deeds. Those Lady Bird deeds are missed more frequently than you could think. I mean, oftentimes when people come into the office, they have their assets, they've named beneficiaries, whether it's primary beneficiary and contingent beneficiaries on those assets. But what about the other assets that you have out there, the lakefront property or the second home down in Florida or different properties around the globe? Where do those properties go when you pass away? And here in Michigan, that's where the Lady Bird deed comes into play. At Centennial Wealth, we're not attorneys, so we can't provide that estate planning advice, but we partner with different law firms that'll travel throughout the areas, our various offices, and help navigate all those different estate planning laws. There's also the tax portion that's a very big aspect of it as well.
Yeah, I agree with Nick in, hey, what are the different tax situations that you might find yourself in? Recently, I had a potential client, they came in, they had built up an enormous amount of money in tax-deferred accounts through 401ks and IRAs. And their first concern was, hey, I'm worried about my estate tax. I'm worried that what my goal is to be legacy-minded and help my kids and grandkids, I'm worried that's not going to be achieved based on the current laws. What options do we have? So I was able to sit down, we got a whole lot of data, and then I got to do what we love to do. We got to go figure out solutions to their particular problem. We're independent, we're not captive to one train of thought. And so because of that, it becomes a little bit like a really tough treasure hunt, okay? How do we minimize the tax burden for this client? So we were able to go through and find 2 or 3 good options that could be a great way to put in place now and avoid those potential estate taxes coming later. Really what it taught me in this whole situation was that everybody has a unique story. Everyone has a unique situation. And when you have a worry, by addressing the worry, figuring out what's out there, you're going to understand what your options are. So of course, feel free to call the number on our screen if you want to set up a no obligation meeting where we can just get to know what your story is looking like right now and figure out how we can plan to retire well for you. And stay tuned, because coming up, we're going to be talking about qualities to look for in an advisor.
If you're retired or approaching retirement in the next 5 to 10 years, this event is for you. Please join us for this informative, no-cost, live event to dive deep into retirement planning. This event is all about you, the challenges you face in retirement, and the information you need to help build the future that you want. There's no pressure to become a client, and our goal is simply to give you valuable information that you can use to make smarter financial decisions. We hope by the time you leave this event, you'll be empowered to make financial decisions that will provide for your future retirement.
Living life isn't always easy. It puts up challenges and obstacles you'll have to overcome. There are responsibilities. You put in effort to provide and take care of your family, and to save and invest, to balance work and life. Planning is the first step to succeeding. Plan to retire well.
You can have a portfolio, or you can have a plan. You can play it safely, or you can safely plan. You can guess when to take Social Security, or you can make your decision based on detailed analysis. You can hope your savings will last your entire retirement, or you can take action and know. You can let life happen to you, or you can take control. You can go it alone, or you can have an experienced guide ready to walk with you every step of the way. We are Centennial Wealth Advisory, financial planners serving all of Northern Michigan. Offices in Gaylord, Petoskey, Traverse City, and Cadillac. Simply call the number on your screen for a complimentary initial consultation and let us help you plan to retire well.
Let's take a few minutes and talk about what qualities to look for if you're shopping for a financial advisor or considering putting your money with one. I'm going to give you 4 ones that I think are important here. 1, experience. 2, basically, do they have a specialty? 3, do they have your best interest in mind? And finally, communication and education. So 1, what is their experience? Well, have they been through different market environments? You know, not every year is going to be an up environment in the general stock market. So have they been able to maneuver and position clients appropriately through the various aspects of the ups and downs of the market? Also, the economy does different things every year. How experienced are they with tracking that and either working with specialized individuals or teams of investors to make sure that you are being properly invested or matching up with what you're trying to accomplish? When we talk about specialties, it tends to be out there that a lot of advisors, when we look at the world, if you will, there's two types of investors. Growth and accumulation tends to be working younger, you're just adding money, you want to see as big as growth as possible, not needing to access that money right away. And then the income and distribution phase at some point, preservation of wealth sort of stuff, retirement. So oftentimes, depending upon where you're at in life, does that advisor have a specialty in one area or the other? Very different set of skill set when you think about retirement and the needs of that. Money is going out versus coming in, and now we have to make that last over a lifetime. Does your financial advisor have your best interest in mind? Think of the questions they're asking you. Is this a goal-oriented plan where these things are all built and designed to match up with what you're trying to do and your various goals? Or is this a plan that is more designed to sell you something and then is then trying to fit into what you're trying to accomplish? So think of that when you're going through and asking advisors questions. They should be asking you lots of questions as well. Finally, communication and education. How often is that advisor reaching out to you, touching base, reviewing your goals and strategies? How often and how much are they trying to educate you about the economy, what you have and why you have it, the advantages and disadvantages? We believe education is very important. Obviously, a lot of people put a great deal of trust in us to manage their retirement plans, but we want to come alongside you as the experts and help you understand what you have, why you have it. If you'd like to talk with us, please give us a call. We love the opportunity to give you a second opinion on your retirement plan.
Hey, welcome back. I hope that you got to find that list of qualifications that you might want to look for in an advisor helpful. This is an important decision that you have to make, and it was one that I would challenge you to do a lot of research. When people ask me, hey, what should an advisor be? What should we look for? I just give them one sentence. I say, do you trust what they are teaching you? There's a couple parts to that sentence. Do you trust them? Do you trust their firm? Do you, by just in your gut, do you think they have your best interest in mind? If so, that's good. Stay there. The next one is, are they teaching you anything? When you ask questions, if you raise concerns, what's the response? If it's education first and problem solving at the point and tip of the spear, that's 2 checks. And if you can trust an advisor to teach, you're good to go.
Yeah, the big thing there is just education. Is your advisor providing that education that you're looking for? Oftentimes in the Gaylord office, we'll have couples come in, they'll plop their statements on the desk for that initial meeting and say, okay, what do you have to offer? And that's kind of backwards thinking about it. I mean, we're not, at least here at Centennial Wealth, we're not here to sell certain products to you. We're here to develop an entire retirement plan. So yes, we do that investment planning, but in that initial first meeting, that's kind of the last thing that we're going to talk about. The first thing we want to talk about is you. We want to get to know you, get to know your situation, what your goals are for retirement, and then after that point, we'll build the investment plan around your goals and aspirations for retirement. And so I think if you're sitting down with an advisor and they're just trying to pitch you some certain product, we found there's no certain product out there that's going to meet all your needs. There's a multitude of different investment tools out there. So you want to make sure that your advisor's not just trying to push certain things on you, they're trying to educate you first and then develop that retirement plan second. So hopefully you found that valuable. Please don't hesitate to give us a call and number on the screen. We'd love to get down and meet with you and hear your story. Tell us what you're about so we can help you plan to retire well. All right, we'll see you next week.